Hello, everyone, and welcome to the Elevate Your Equity podcast, where investors with a special emphasis on couples begin, continue, and deepen their journey to financial freedom together using the powerful vehicle of real estate investing to do it. Today, we've got an awesome guest on our show. His name is Travis Watts, and he is a full-time passive investor. He's been investing in real estate since 2009 in multifamily, single-family, and vacation rentals. And Travis is also the director of investor relations at Ashcroft Capital, and he dedicates his time to educating others who are looking to be more hands-off in real estate and real estate investing. Travis, it's a pleasure to have you on. How are you today?
I'm doing well, Derek. Thanks so much for the invite.
Of course, of course. So let's start like we always like to start. How did you get started investing in real estate? Where did the interest come up, and where was that spark that finally got you up and excited about it?
Yeah, it's kind of an interesting story, really. My parents split when I was 5. And so I saw my dad sometimes a couple of weeks in the summer, every other weekend. And so I was with him in one summer. This was back in high school. And he's a big garage sailor, very frugal upbringing, by both parents that I had. And so he brings home this Robert Kiyosaki book. It was not Rich Dad, Poor Dad. It was called Rich Dad Prophecy. And that was the first introduction to investing conversation, we'll say, or education that I had ever had. The conversation was never had in the household. At the time, my dad was not an investor. Neither was my mom. It was more about the save $1, right? Buy the off-brand, use the coupon, don't buy crap you don't need, don't get into debt. So very thankful for that kind of upbringing. In hindsight now, it was kind of, I rebelled against it as a kid, not getting what I wanted, of course, wanted to spend money on stupid things. Anyway, so I read that book and it kind of planted the seed on a few things. It was leverage other people's expertise and knowledge, which clearly I didn't have back then as far as investing was concerned. Invest in real estate was a fundamental undertone to that book versus, say, the stock market, and invest for passive income. And that really has become my mission, my statement, my give back to the world is teaching people about passive income investing, whether that be multifamily like I do now or any other kind of asset type. But just a big believer in the power of passive income, what that can mean for people. So not to get too sidetracked on that. So back to the story. So I read that book, wasn't in a place at that time to start investing. Again, this was high school, went off to college, did a couple years, wasn't really for me. Went back to Colorado where I was kind of raised and brought up. And I got into the oil industry for the sake of making money. Well, that didn't really fit me at all, but I thought it's my highest and best earning potential so that I could be frugal, save my money, and put it into real estate and become an investor. And so that all started to unfold in 2009 is when I bought my first property, and I did house hacking. So I just rented a spare bedroom out to a college student that effectively paid my mortgage. And so the wheels got turning, and so that led into fix and flips, vacation rentals, and all kinds of things that were very active and hands-on till I burned myself out. It took about 6 years to do that. And then I transitioned to being a hands-off investor and investing in things like real estate syndications, private placements, stuff I do today. And most of my content's really based around that. And so just helping busy professionals like I was, I was working 98 hours a week at a W-2 job. And that was a lot of time to work, a lot of dedication. So trying to scale up everything actively on the side was quite a struggle. And so hence the passive investing. So that's kind of the story in a nutshell about how and why real estate, I guess, from the fundamental.
That's excellent. We have a lot of similarities because I also went into the oil and gas industry not knowing what I was going to do, but also wanting to make some money and pay off my student loan debts and live cheaply, live the Dave Ramsey way. So it's really funny how that path is also similarly walked by some other very experienced investors. I have to admit, too, that getting started in real estate investing back in 2009, that must have taken an act of faith, or must have taken a leap of faith, because I know that in 2008, it seemed to be the cause of, the crash. Can you walk me through your thought process then of trying to explore this? And then next, I'm going to ask you about how to balance the W-2 work with this. But talk me through how you're able to explore real estate investing with such a clear head in 2009.
It's funny. I wouldn't say I was exploring it with a clear head per se. It's funny that I get two responses when I tell people today that I started in 2009. You either hear, "Wow, didn't you time it perfectly? You know, look at you starting at the bottom and working to the top." Then I also hear, to your point, what a scary time that was. And I specifically remember asking my own family, parents, friends, should I buy real estate? Absolutely not. Are you kidding me? Everything's falling apart. You could buy a home and lose half your money tomorrow. You know, everyone was scared to death. Everyone told me, do not get started buying real estate in 2009. And in the market that I purchased in, it was still on the decline, by the way. So there was no, little recovery curve happening in 2009. So here's what I knew. I had to look at the facts. And this particular property that I bought was a 2-bed, 1-bath. I knew my mortgage payment would be about $640 a month. And I knew that it sold for about 40% more just a couple years back. Okay, so I knew a few things. And I also knew, because I was a renter in college just several months leading up to this, I knew how much people are willing to pay for a furnished bedroom in a house next to a college campus. That number happened to be $600 a month. So I thought, hey, listen, I'm going to buy this house. I don't care if it keeps going down, because I'm going to make my mortgage payment renting it out to someone else. And I knew at least I was going to have a low overhead instead of entering the market as a renter and paying, $1,500 a month or something like that. So you kind of have to make these decisions for yourself. And I guess easier said than done, but that was really going against the grain for me at the time. And I had to put nearly 100% of my net worth into this property to rehab it, to purchase it, the down payment, all things considered. So you got to put yourself in that scenario too, thinking about, yourself today or whenever. I went all in. I went all in kind of on a whim and against the grain of what people were telling me to do. So yeah, not really a clear-minded thing per se, but that's how it all started.
Yeah, and then you mentioned too that you started to do some extra stuff on the side, because I assume at this time, in order for you to get a loan, you probably had a full-time job, or you just graduated from school, right? And so
Right.
you had a job, and so people were saying, okay, well, you're credit worthy, we'll give you the loan for the house.
Right.
How did you go from there? How did you go from being a homeowner who was house hacking essentially to now getting to a point where you're starting to do stuff actively on the side?
Yeah, exactly. So here's kind of my 4-step process that I use. I'm a big believer in working your highest and best earning potential. Hopefully it's something you love doing. In my case, it wasn't. It was the oil industry, but it was my highest and best earning potential. Number 2 is live on as little of that income as possible, just for a period of time. I'm not an advocate for people living at the poverty line their whole lives just to save a buck. That's not worth your time or effort or energy. No one wants to live like that. Number 3 is you have to learn investing. You can't just be frugal and shove it under the mattress and hope for the best. You're not going to get where you want to go unless you set the bar really low, I suppose. And then number 4 is just to your point earlier, you mentioned Dave Ramsey. I never even took his programs, but big advocate for just not taking on consumer debt. If you're going to get a car, try to pay cash, try to buy used, these kinds of things, credit card, retail debt, that kind of stuff. So those were the 4 steps that I used initially. And so to your point, I had a W-2 job where I was credit worthy. So I could start buying real estate. So how it happened was, yeah, a lot of people probably aren't going to believe this part, but I was making, 6-figure income through the oil industry. I was saving about 70% of my income at the time. Because remember, keep in mind too, single, no kids, no pets, no obligations, and just fresh out of college, where I was earning about $8,000 a year and living off that. So, I could pinch a penny. So yeah. I saved all that income. And again, I was buying at a time where prices were really depressed. And so even putting 20% down on a lot of these properties would be like $20K. So you can kind of run the numbers in your head, making over 6 figures, saving 70%, yada, yada, putting 20K down on a property. So then we started to see the recovery in the market. So now we're looking at 2011, 2012, 2013. Now we start seeing the market trending upward. I was in a really hot market too. I was out in the Front Range of Colorado, outside of Denver. And so now all of a sudden I'm buying properties, renting them out, and the appreciation's double digit. I'm just sitting on them for a year or two and selling them. And so that kind of got my interest into flipping. So that's kind of how that came to be, is I'm thinking, why just sit here and collect a little bit of cash flow if I could just turn around and make a 40% profit, in 6 months. And so that's when I learned about how active flipping homes and the whole HGTVs full of so anyway, a lot of lessons learned during that period. And then I got even more active doing Airbnbs. It was a heck of a cash flow play for me, but it was so hands-on. It was just, and I couldn't relinquish the control in those circumstances for whatever reason at that time. I know there's more passive ways to approach it, but so yeah, that's what inevitably burned me out, was trying to go hard, go fast, be impatient, do everything myself, not leverage other people's expertise, stuff like that.
Excellent. So when you were going through this journey of actively flipping or, tending to your properties, so to speak, where did you start learning first about multifamily syndication or about partnering up with people? How did that come into the picture? Were you actively seeking it? Did you have networks, or how did that come up?
Yeah, so those kind of three fundamentals that I mentioned previously by Robert Kiyosaki, so I was doing two of them pretty well, right? I was doing the real estate thing. That was the underlying tone. I was investing for passive income, and equity too, but passive income as well. But I was not doing number three, leverage other people. How it came to be was in 2015, I started realizing that my naive goal of I'm going to have 100 single family homes before you know it, self-manage everything, and, be off to the races in retirement. I was burning out. It was closing in. And I thought, man, this is not scalable. I don't see how I'm going to get myself out of this mess. I'm going to have to quit my job just to take care of these properties and stuff. I realized I didn't know what I didn't know. To this point, I've been trying to do it all by myself, trying to figure it out by myself, just trying to, work through problems. I went to a local real estate meetup group out in Boulder, Colorado, met a couple gentlemen. One was in his 60s, one was in his 70s. They had sold their businesses about 20 years prior to me meeting them. And they were full-time passive investors, which is what I am today. And that was the first time I had ever heard the terms passive investor, real estate syndication, real estate private placement. It was all jargon. It was all new, but they were very great mentors to me. Didn't use a ton of their time up, so it wasn't like a paid mentorship. They were just willing to share kind of how things have been and risks and pros and cons. And they really painted the picture going through the recession and everything else, holding these multifamily properties. And I thought, you know what? I like the risk profile associated. I like what their past performance has been. And I really love the concept that I could be hands off and not have to manage all these tenants and do all this work. And I'm certainly not a handyman, by the way. And so that's how it came to be, is, they kind of paved the path for me. And I finally realized this is a real thing I could do. This is a real thing I can pursue. And not many people talk about it. And that's why I talk a lot about it. And so I'm kind of a voice for the hands-off investors out there. At least I try to be.
That's great. So can you explain a little bit about the passive investing process? What it is that most investors should be looking for whenever you're investing passively? Because a lot of people, when they take the jump, or when they make the jump from being, first of all, in a W-2 world, and then getting inspired that there's a real estate investing world out there, most of them end up going to the active route just to see, just to kind of explore. At least that's been my experience, is you kind of explore and figure out what's out there. But what advice do you have for folks like that who are maybe don't know about passive investing and want to start looking for it, or some distinguishing factors between them and investing actively?
Sure. I like to draw a lot of parallels. So I'll draw a parallel between investing in stocks versus what I do. So because a lot of people are familiar with stocks. So the simple concept is this: you can invest in a growth stock, one that maybe doesn't have any kind of dividend or distribution, but is up and coming. They're emerging. They're reinvesting most of their profits and capital into the business. So this is your classic buy low and sell high strategy. And most people, when they think of investing, they think of that. They think, well, yeah, it's just buy low, sell high. That's what it is. But it doesn't have to be. And so this is kind of what the whole Robert Kiyosaki planted the seed for in my mind was, what if the price didn't really matter? Whether it's up, down, sideways, or never going to go up. What if you were actually investing for an income stream? So when you place money into this asset, you start getting monthly checks written to you. So that's a whole different way of thinking. It's a lot less, in my opinion, speculative. I'm not having to think about inflation or if this company is just going to knock the roof off and hit a home run. Instead, I'm saying, what has this company been distributing historically to their investors? And what's the probability they can do that today and continue doing that through the future? And you've got such a track record to look at. It's, like I said, a lot less speculative. So what I do is, a real estate private placement is basically leveraging other people, like I mentioned earlier. So you've got general partners and limited partners. So I'm a limited partner. So the general partners are going out there and they're finding deals, they're underwriting them, they're managing them, they're making sure that property management's on site, construction crews are doing what they should be doing. Like, they are literally hands-on, active, full-time, year-round. I'm the guy saying, I like the deal that you found, I like that property, and I want to invest alongside you in this business plan of maybe, buying this property, renovating it, and hopefully selling later at a higher price than what we paid. But more importantly, getting the cash flow coupon distributed out to me while we hold the project. So I'm just the guy says, here's 50 or 100K. And, I'm a 1% owner of the deal, that kind of thing. So I think what's key to all of this, me rattling all these different things off, is that it's great for people who want to toe dip in real estate, but maybe don't have the time, energy, or expertise to go do everything themselves or try to learn it all from scratch, right? It's something where you can still have your stocks, bonds, mutual funds, CDs, whatever you have, and you could just take a little bit and go put it in a real estate syndication and start investing for yield, for passive income, and for cash flow. And in today's environment, I just got to say, I don't think there's a better time to be looking for a higher yield than what's available in most products right now. When you go look at annuities and CDs and putting your money in the bank, where's the yield? Who's paying you, what, 1% maybe? And so putting that in something that may be able to produce 6, 7, 8, 9% cash flow, something like that, that's where it really stands out to me. That's where it really becomes a lucrative consideration, because we all hopefully want to get to a point where we can retire. And if you don't want to retire on the quote unquote retire, at least have flexibility over your time and your lifestyle, whether you want to work more part-time or travel like you and I love to do and stuff like that.
Can you speak a little bit to the selection process? Like, how, if someone is a passive investor first, there's this big hurdle where people are working full-time jobs and they first have to understand what a passive investment is, or even know where it is. But then there's another hurdle of which one to select, because as professional passive investors, which is what I also aspire to be doing eventually, one of these days.
Nice.
Being able to just invest in a bunch of people, a bunch of people's properties and different properties across the country, probably one way to mitigate risk. So how do you go about selecting those properties to invest in, or how would you advise some passive investors to do that?
Well, I'm happy to share kind of my strategy and philosophy. I can't tell anyone what they should do, but I'm happy to share what I do. And so what I do is I start with the end in mind. Why am I even investing? Why? You've got to think about these things. What is the long-term objective? 5 years out, 10 years out, 20 years out? Is it put my kids through school? Is it get out of debt? Is it retire at age 50? Is it 5 million in the bank? Like, everyone's got their goals and their whys. Figure that out first, because quite frankly, this style of investing may not be right for you, but until you start with the end in mind, you wouldn't know that. So now it's what kind of investment vehicle can get me to that goal. So for my wife and I, we love to travel, as I mentioned, and I wanted to live off of passive income. So one, I needed a higher yield than what I could find in other products. Two, I like a combination of cash flow and equity upside, so I can grow my wealth over time and we can do more as we age and get older. And, we've got some personal goals of retirement and things that we want to accomplish. So for me, this kind of investment allows us to be passive, hands off, everything else. Okay, so number 2 is select your investment vehicle. Then it's get educated on the topic. So listen to podcasts like these, go read books on, real estate estate syndications, learn the fundamentals, learn how to vet a deal, a market, a sponsor. I've made videos on that. If you guys want to check them out on YouTube, I've made all of those in multiple variations, everything from an hour-long segment to 5 seconds, or not 5 minutes, I guess it would be. But anyway, so now what it is I'm looking for operators in the space that are doing the kinds of deals that are going to help me meet my goals. So I like value add deals where we're buying a property and renovating it. I like deals that cash flow from day one. They're already occupied. They're already stabilized. They already have paying renters in them. I like particular markets. And so what I'm doing is I'm just seeking out groups that meet this criteria. And believe me, there's thousands of them. That was a misconception I had when I got started, is I'm like, okay, who are these like 2 or 3 groups out there that are doing these syndication things that I'm hearing about? And there's just so many, but you got to network and you got to get in the scene and you got to read the books and you just got to get out there to learn this. Real estate's always been a people business and it continues to be to this day. So find a mentor, find a book, find a podcast. So anyway, it's just all to say that you reverse engineer. That's the bottom line.
I love your answer. This is something that I've also given much advice, or I've told people about this type of method, which is basically get referrals, get educated, just start networking and learning, dive in, just act as if you're ready to invest right away, but be diligent about what you want to, about who you're going to be putting your money with, because it's a 3 to 5 or even 7 year partnership or marriage, you could call it, whenever you're putting your money in with someone that's supposed to be growing, right? And so there's reputation, there's performance of the deal, there's whether or not you like the market, all those things you touched on, which is great. So thank you for that. One thing, because you mentioned that it's a people business, one thing that we'd be remiss to not mention is the fact that you have a family at home, right?
Right, correct.
Yeah. So you've got wife, some kids. So we need to talk about that part of the business too, especially when you were growing. Right now, it's fairly simple because it's passive investing. So it's pretty easy for you to be able to take a package and sit down with your significant other and sit down and say, this is what we're looking at investing in. We think this is a good deal. Here's the parameters, that type of thing. But when things were getting started, can you talk us through any of the growth curve or anything, what the conversations at home were like, especially when you first started actively investing and then started to make the transition from active to passive?
I think it's such a great question. And it's so much about self-reflection, knowing yourself. There's some great resources out there. My wife and I was very fortunate that my wife was very into self-education herself and other aspects. And so we both could agree on things like going to a Tony Robbins event or something like that, where we could try to improve ourselves. She might have been more focused on, say, diet and exercise. I may have been more financially focused, but we both could collaborate on this. Let's make it better. Let's get better. Let's create a lifestyle, that kind of thing. So that was kind of number one, I guess. Maybe I got lucky with that. And that's why I married my wife. But as far as the finance stuff goes, so if you go look at the statistics, it's really a tragedy on how many marriages are that just one side of the coin is running the show 100%. And the other side knows relatively nothing, right? And so I saw this within my own family, saw this within my wife's family. And so we came together and to agree that whatever her passion was going to be as far as self-education, right? She was going to go do the work and the reading and the programs and the courses and relay that to me. We were going to have a serious sit down so that I could try to get the bullet points and the highlights, and that I would do the same for the investing. Okay. So she's never going to be the type that is like me, where I go out and put, 15, 20 hours a week into investing research and knowledge and trends and markets. She's just not going to take the time to do it. And that's totally cool. So what I try to do is just relay what I feel is most important for us about the things that I'm studying and the things that I'm learning. So this is kind of how we came together on it. I would never expect anyone to do as I do, or, like I said, put in that kind of commitment. She knows I won't either for the diet stuff, right? You'll find me at Taco Bell saying, I don't want to cook. So, so we're expecting our firstborn. So, soon to be family, I guess.
Congratulations.
To answer that. Well, thank you. Thank you. So that's going to be a whole another chapter and learning curve for us. But yeah, and one more thing on this, on the couples thing that I feel is pretty important, never giving advice to anybody else, but we decided I wanted her to set up her own entity, and I wanted her to make her own decisions on what investments she wanted to do. And so I'm always there as the support system to give a second set of eyes, but I'm never there to say, here's what you should do. Because I really want her to have skin in the game. I really want her to go through the motions because, if I got hit by a bus or something, I need her to be sufficient for our family and independently, just as a woman. And so that's always been very important to me. So that's how we have things structured.
That is some pretty good wisdom there, because it's like you're continuing the dialogue both inside the financial realm and outside of it. And you're giving your spouse some information and the ability to invest in stuff on her own, right? Which is super cool. I really like that concept. Would you say that there was any type of convincing or any type of conversation that needed to happen on the financial side? Because you said yourself, in the beginning, there was a lot of talk with your wife about her being more interested in the health and wellness side, and then you're more in the financial. Is there crossover there, like where you got interested in some of the stuff that she was, and then she got interested in some stuff that you have been? Talk to that a little bit for us. I'm sure a lot of our listeners want to know that.
Sure. So back to the self-education component that I discussed earlier. So you kind of have to know yourself and you kind of have to know your spouse. And so what I know about my spouse is there's certain things that she absolutely loves to do, like travel, for example, no matter what we're talking about, going to Costa Rica for 3 or 4 days, or Hawaii or Europe. So here's how I would spin it to her is, we need to have an investing focus because, for example, if we do this deal and it distributes, and I'm just making all this up for example purposes, and it distributes $600 a month cash flow back to us, that means every 3 months, we can go take one of these trips and have it fully paid for from our investment, right? So again, this is back to Robert Kiyosaki. You buy an asset that pays for your liability, right? Instead of just save, let's go blow it on a vacation. Now we're back to square one. We still can't invest. We still don't have any money, and so that's how so many people live their lives. And so it was just being able to motivate her that way, I think, or to say, she loves massages and she's always trying to get me to do massages. And let me tell you something, I hate giving massages. It's like the worst thing ever, just like gives me acid reflux. And so anyway, so I said, hey, how much is a massage, right? And whatever it is, 80 bucks. Okay. How many per month would be adequate and make you happy? 2. Okay. Well, let's make this investment and the cash flow will pay for your stupid massages. So that's how I've spun it, but everybody's different. So at least that's something to consider, is find out your significant other's motivation, and hopefully you can persuade them that way.
That's awesome. What superpower have you developed during this whole process to be able to leverage into your real estate success? Because I'm hearing a go-get-'em attitude. I'm hearing support from a spouse. I'm hearing all these great things, but I know there's always the mindset piece that drives everything through. So what superpower have you either used from your W-2 or developed to help you to get where you are right now?
Yeah, I think unfortunately, you could call it a superpower today. I don't think it used to be that way, but I would just say willpower, So I always say that I can is more powerful than IQ. It's probably not my quote, by the way. I don't know who originally coined that, but it's so true in my mind. And so you have very few people willing to just put in the effort, right? Earlier, when I said, go read a book, go listen to podcasts, go to a local real estate meetup, that's just 3 things, right? But 90% of people won't do them. So having the willpower to say, listen, this is important. This is my life. I got one shot at it. Let me go and give it my best. And just doing simple tasks like that consistently over time, it's like compound interest, man. It's like a compound interest curve. You're just building a foundation and it's getting bigger and wider and stronger as you go through the years. And all of a sudden, just things start clicking. And I will tell everybody listening, I am not a very intelligent guy. I am not a book smart guy. I mentioned that I only did a couple of years college and I hated every minute of it. I just couldn't stand it. I'm not a school bound person. but I had the perseverance, I had the willpower to go work in the oil field and do 98-hour work weeks and go work in Saudi Arabia where it's 120 Fahrenheit in the summer, and then go work in Wyoming where it's negative 25 Fahrenheit in the winter and swing a sledgehammer. You know what I mean? These are all things I hate, but I saw a bigger picture. And I said, if I'm willing to do this for a short amount of time in my life, I'm going to put the money back, put it into something that hopefully is going to grow and compound, and it's going to make a life-changing difference long-term. And it has. And so that's my message to people is, doesn't have to be hard. You don't have to be smart. You just have to take action.
Yeah. Amen to that. Very, very well said. One last thing that I wanted to ask you before we head into the rapid round, where it's the same 5 questions we ask everyone, is you mentioned a story about you and your wife backpacking in Thailand. Do you want to explain that a little bit more?
Sure. Yeah. Well, so we went to go backpack Thailand for our honeymoon, and it was a lot of what I explained earlier. The whole point of that was to, well, first of all, we're both into the FIRE movement, financial independence, retire early. I never knew what that was years ago, but we're in this like frugality, invest your money, figure out what's most impactful to you, what brings the most happiness. And I'm telling you, man, we had a beautiful wedding in the Bahamas. We took a beautiful honeymoon in Thailand. And between both of those, if you look at the price point, it was like probably less than half of what most people spend on a traditional wedding, you know? And more importantly, we preemptively did investments that produce cash flow to pay for all of it. So it was just a beautiful, to me, it's signified our relationship, you know, coming together and what it was going to look like long term. And I only share that not to, of course, I'm never bragging or anything about things that we do or things that we like. The point is, think about it for you. And what I think a lot of people don't realize is how inexpensive happiness can really come, right? For a lot of people, it's just like going on a walk in nature, you know, twice a week. You know, it's free, you know, just get out there and do it. So yeah, I think that if any, I know this could be like an hour-long conversation right here, but if anybody looks into the FIRE movement, I think it's got a very beautiful underlying message, which is that you can design a lifestyle of your choosing, and you can invest perhaps easier than you might have otherwise thought to get to your goals sooner than later. So you actually have life left to go live out your dreams, you know? And so anyway, just a little side note nugget, go research that on your own time.
Very inspiring. Love it. All right. Well, Travis, thank you so much for all the great information and sharing your story with us as well. But we're about to hop into the rapid round right now, which is the same 5 questions that we ask every one of our guests. And they're meant to be relatively quick answers. So let's see how you do on these. You ready?
Let's do it.
All right. Number 1, what book has had the biggest impact on you and why, outside of Rich Dad or the Bible?
Unleash the Power Within, Tony Robbins, one of his original books.
That's a really good one. He also has an event too that my wife and I went to, and that was a really great experience too. Firewalking, all of that stuff, right?
Yep, we've been to those. Yep.
All right, number 2, if people wanted to emulate your success, what is the first actionable thing that they could do to follow in your footsteps?
Start doing a little bit of self-awareness, I would say, more than anything. So really start on, like the book I just mentioned, like a Tony Robbins book. Doesn't have to be him specifically, but go to an event or a conference or something where you start to write down your goals, and you start to write down your strengths, and you start to write down what brings you happiness. I think that's really the first step.
Good advice. Number 3, what small thing do most people not know about you?
I used to drum in several bands, and I was a terrible singer in 2 bands in Florida back when.
Sorry, I don't mean to laugh, but I totally get that. You actually have been the 4th or 5th guest that says that they play drums or they used to be in a band or something like that. It's really cool. Really, really cool.
We should all get together and form a terrible band.
I think so. I need to connect all you guys. It'll be like a virtual band across the United States. It's be very, very cool.
What better time than now?
That's right. Number 4, how do you like to unwind and restore your creative juices by yourself?
I have been practicing for about 2.5 years meditation. I am not that great at it, but it really does help when I can get into the zone, so to speak. I've got a mind that just fires from before I wake up to perhaps even after I'm asleep. I mean, it's just going, going, going. So I get very little rest in my mind. And so that wears me down, over the course of a day. It would probably anyone. And so meditation, just taking in the middle of the day, if I can, about 20 to 25 minutes and just envisioning a blank wall and just really trying to shut it down makes me feel like I just got 8 hours of sleep sometimes.
Excellent. Excellent. Great tip. And last question that we have here is, what is your favorite family or couples vacation spot?
Ooh, Sandals Resorts. They have kid and they have adult only. So it's kind of like choose what experience you want to have, but big fan.
Very cool. Well, thank you so much, Travis, for coming on the show today. And thanks for imparting all of your wisdom and sharing your journey with us. Now, before we go, is there any place that people can find out more about what you or your firm offers? And if they want to reach out to you, is there any way they can do that?
Sure. I like to offer a one-on-one 15-minute call. For anyone and everyone, whether this is Ashcroft related or not, anything that we talked about, you can find that at www.ashcroftcapital.com/Travis. And my calendar link's right there. And I have a downloadable PDF on there. It's called Understanding Real Estate Private Placements. It's about 20 pages. So again, you're talking about starting first steps, everybody. If you just want to toe dip into the self-education stuff, it's a great free, non-salesy PDF. I don't have any programs or courses to sell you. So just here to give back some time if I can be a resource or help anyone.
Fantastic. Well, Travis, thank you so much for being on the show. We really appreciate you being here.
Thanks, Derek. Thanks everyone for tuning in.
Yeah. And for all of you listeners who have been listening all the way to the end, really appreciate you. And please, if you could like or subscribe to this podcast, wherever you're listening to it, or even watching it. If you're watching it on YouTube, that's incredible. Love that. Please subscribe, like, comment, engage with us so that we can do better and we can appease the algorithm gods so that we can move up the chain and start to get more exposure to more people and get this beautiful message of passive real estate investing out there to more people. So that's pretty much where we want to be. We want to elevate the energy of the world and get this energy and get this message out there. So that being said, this is Derek and Travis. Thank you for coming on. We really appreciate it. We're signing off for the day. Thanks.